growth numbers. Ekta.
Well, I'll get you a couple of brokerage views on the GDP data. So I'll start with Citi, which said that the Q4 FY16 GDP of 7.9% surprised positively. The consumption demand emerged as the driving force. Remember, consumption growth has averaged only around 5.7% in first half of FY16, and this jumped to around 7.5% in the second half. Separately, agri growth of around 2.3% in Q4 pointed to a better Rabi crop, as well as which could be aiding rural demand going forward. However, we need to watch, according to Citi, for slowing investment growth. Q4 GDP likely to enforce growth optimism overall, according to them, but they are mindful that Q4 benefited from a lower base, and the estimated real GDP growth for them for FY17 stands at around 7.7%. Credit Suisse, they expect FY17 GDP to improve to 7.8%, will be driven by agri as well as private consumption. Corporate investment and exports likely to remain lackluster. They expect the RBI to pause on rates for the rest of the year. Yes Bank, growth momentum built up in Q4 it appears to have continued into this fiscal as well. They foresee upside to the earlier 7.8% GDP estimate that they have, and GDP growth in FY17 could stand then closer to around 8.1%. Lastly, Edelweiss said that for FY17 they expect 50 to 60 basis points acceleration in growth momentum, and their forecast for FY17 in terms of growth stands at 7.8 to 8%. This will be led by monsoons, receding export drag, lower lending rates, and government spending in infrastructure.
Okay, the key takeaway from what Ekta is telling us is that there are some people, Edelweiss and Yes Bank, who are actually talking of 8% growth in the current year. Now, that's a coveted number.